All right, we are live for the weekly market update, and I am really excited this week. We're going to do it a little differently. We are going to jump right in with my partner in crime, Mr. Mark Koretsky. Welcome.
Thank you for having me back. I appreciate it as always.
Always a pleasure, man. We are in November. It's official. Halloween is somewhere back there.
Christmas is around the corner.
Oh my gosh, I was in Michael's the other day and anyways, don't get me started. Let's jump in, Mark. We're going to keep it light and tight for this week, and I really want to go through. We've been talking a lot about price decreases, what's happening with buyers, what's happening with sellers buying down points, different machinations of what's going on in the market. And today, what I would really like to continue to focus on is the fact that, yes, everybody, there are price decreases. There's no question about it. We're going to continue to see it. In Austin, what we know is about 1 in 3 sellers right now is a builder. And so when you look at that and when you look at price decreases, we see price decreases always in Q4. However, this year we're obviously seeing more, right, Mark?
We definitely are. There's a lot of incentives being thrown around. And you mentioned the price decreases in Q4, but November, December, out of the 8 years of me doing mortgages, have been some of the biggest months in my entire year. And it's because whoever is looking to sell or looking to buy, they've got to be crazy or else they really want to buy a house, right? Like nobody wants to go shopping during the holidays. So buyers and sellers, they can actually come to an agreement this time of year.
Yeah, it's a great time of year. In fact, I'm at a house that we're preparing for sale that'll be coming out of the market next week, and there's no doubt that there are homes for sale. This is a multi-million-dollar home. There are others in the area, not a lot of them, not a lot to choose from. So we want to strike while the iron's hot because there aren't a lot of choices in this neighborhood for people to get into it. So depending on where you are, there are some really great opportunities going on.
There really are. And right now, everything is changing. Everybody is kind of on eggshells waiting to see what the Fed says and what they don't say.
Mhm.
And I think there's just a lot of skepticism in the market out there, both like from the mortgage side of what's coming from the Fed, and then from the consumer standpoint of what they're kind of deciphering from all the headlines that are coming out and going out everywhere.
Absolutely. And what I want to say for everyone who is watching, the market for buyers and sellers is hyper local. Reading about a market being flat or a market being down is only relevant if you are buying and selling in that market. So don't, please, please, please don't get caught up in what the national quote unquote news is, because that news is not your news.
I think we live in a world that tries to commoditize everything, right? And it look like we are some of the most analytical people, and like a lot of people and consumers in general are looking at the real estate market as the
Mhm.
stock market, and that's like the entire wrong approach and mentality behind it. We're, too many people are waiting on that next headline, and when is the crash coming? When is the crash not coming? Nobody's looking at it for what it really is, which is this is your shelter, and you really only have one other choice, which is to rent it.
Mhm.
And when you rent it, it's usually more expensive, and then you have nothing to show for it, with none of the freedom of home ownership that comes along with it. And so it's always going to be, for the average consumer, the best investment they can make in themselves, because they go from paying a landlord to paying themselves, right? And so that's what, at the end of the day, that's what drives the market. And right now, there's so much skepticism out there, but the best analogy to bring to the table is really the highway analogy, right? Let's say you're driving down the highway, you're going 100 miles in one direction, you're driving, there's no cops around you, you start to go faster than the speed limit, right? You keep going faster than the speed limit, you see a cop, you slow down, right? Just because you've slowed down does not mean you've stopped, nor does it mean that you've gone backwards. It means you've decelerated, right? And so the rate of appreciation that we saw was way over the speed limit. And now that we've seen cops and we see the Fed doing the moves that they do, we're just decelerating, right? Like right now, we're still up, depending, like you said, depending on the market, because real estate is hyper local. But nationally, we're up over 12%, depending on which analytics you look at. And so
Yeah,
12% in any market is, again, above norm and above what we actually want to be. You don't need 10% in real estate to make a significant impact to your net worth. You only need 2 to 3% a year.
that's I haven't heard that analogy before. I like that. I'm going to bear that in mind. What I do know is if we look, at our month over month over month, and versus last year at this time, we're actually now right at about the 2021 numbers, which when, looking at the October numbers and I'm just this week, I'm not going to pull up numbers and do the thing. I really want to focus this week though with you, Mark, on the fact that yes, prices are decreasing, and what we really want to talk about is what's going on with buyers and rates and how they are being impacted by those rates. And there's a number of ways, we were talking offline that we can talk about it. So where would you like to start?
Man, I mean, let's start with the elephant in the room, right? Rates are up, and rates, I mean, lack of better terms, they kind of suck right now, right? At the end of the day, the only thing that matters is whether or not you need to move. And if you need to move, you need to just make sure you get yourself an affordable payment.
Yep.
Get that affordable payment, you want to pay the least amount out of pocket and like the least in cost, right? To get that investment, to make that goal a reality, pay the least amount in cost, as long as you're getting the right product, right? And so right now we see a lot, the mortgage industry and the refinance opportunity is gone, right? And so a lot more lenders are competing for a lot fewer buyers. And so you're seeing a lot of difficulty in the mortgage space, both based off of market rates, but then both based off of competition. And so we're seeing lenders resort to, I mean, some lack of ethical boundaries, I would say. And so everybody needs to do what's best for them. And that does mean shopping for the right lender that they feel the most comfortable with. But some of what's going on out there, you probably don't know, both you, Jennifer, and then the consumer. I did just tell you off air, Jennifer, but the credit bureaus, the ones that actually provide the credit reports for all of these credit decisions, their sole job is to collect and sell your information. And so when you go to apply for a mortgage, that credit bureau takes that information, you applying for a mortgage, and they go out and they sell it to whoever they want, right? Number one, if you need the link, throw a comment in the chat. It is opt-out pre-screen. That's going to allow you to actually opt out of the credit bureau selling your information. You can do it both virtually, like digitally, and then you can also mail in it's a lifetime opt-out when you mail it in. But so one of my clients had to get their credit repulled because her credit expired. And that means it took her more than 4 months to get a property, just to put it into perspective. And so as soon as we repull credit, she started getting all these calls because she hadn't opted out. And so she thought she found herself a better deal. And so me being me, I respected her decision after she wanted to go with another lender. But I still just wanted to do my due diligence and just make sure that she's actually being taken care of, because some of the things she was telling me just didn't add up. And so when we actually compared offers, not only was it a bait and switch and they couldn't do what they were saying over the phone, but then the cost of what they were going to present her and actually put her into was going to be a 2% higher down payment. It was also going to be 2.5% more in cost to get the same rate. And so somebody that is out there shopping, they need to look out for themselves, right? Like this is a massive decision, financial decision that makes impact today and then has ripple effects for the rest of your life. And so you need to take that seriously. But at the same time, you need to be really careful with what you're actually believing and who you're believing, because not everybody is like you and I, Jennifer. Not everybody is here trying to say, how do we make the greatest impact on our community? A lot of people are saying, how do we extract the most? And so right now, as times are tough, both in mortgage and for real estate in general, now is the time where people can get really caught up in those unethical boundaries. And so we as consumers, at the end of the day, I always look at myself as a consumer, right?
Mm-hmm.
We need to look out for ourselves and make sure that we have the right people in our lives that can actually help distinguish between right and wrong.
100%. So, folks, if you get nothing out of today, please, if you get one thing, take the following: apples and apples. An apple is not a pear. And so just make sure that when you are looking out for yourself and you are shopping those rates, which even Mark is suggesting you do, you really do want to make sure that you are comparing all of the numbers, which leads us to that next discussion, Mark, about paying up front and saving money for down the road.
Yeah. So, I mean, all signs point to, and nobody knows with certainty, but the signs are pointing to the fact that rates are high today, but they're likely going to come down. And
Someday.
so someday and someday, like on the short term horizon. And it's just there's way too many different intricate parts of the puzzle that are just coming together to basically anybody that's really following it knows that inevitably both US recession and global recession are more likely than not, because we have to continue fighting inflation. And we kind of know how the inflation got here, right? So like there are both the stories of what happened, and then there's the takeaways that we can all take from it.
Yeah.
So the bottom line is right now we're still struggling with inflation. We think we're coming to the end of it, but we don't know. And the challenge is all of the data and like the headline data that's coming out that points us to whether it's inflationary or not, all of it is continuing to point towards inflation, and not just that it's going to go away in the next 6 to 9 months. To battle that, the Fed has to continue hiking rates and making money more expensive. That has trickle down effects on everybody, right? So that is what's likely going to cause the recession. When recessions happen, we have to stimulate the economy. And so what is the Fed doing? They're battling inflation, yes, but they're actually reloading the gun with ammo to fight that next inflation. And so when that happens, it depends on how bad it gets. But at the same time, we are going to have to stimulate our economy back out of it. And so that is coming in the next 24 to 36 months guaranteed. It's kind of just depending on how soon or how late in between there, right? And so when a mortgage investor is buying a mortgage, they're likely buying whether a 30-year or a 15-year mortgage. But at the end of the day, they know mortgages don't stay on the books on average more than 7 years.
Right.
And in today's market, it's not going to be 7 years. It's not going to be 5 years. It could be 1 year. It could be 2 years. And so the incentive to buy that mortgage is exponentially less, right? And so that's the difficulty right now. Normally, buyers would have the opportunity to kind of pick and choose what rate they go with. There will be a rate where they're not paying a bunch of costs to get that rate, and then they can pay some more money to get a lower rate. Or typically they can take a relatively higher rate, and then the lender would give them money towards closing costs. Those higher rate options and those no cost options are much harder to come by because the market and investors believe they're not buying a 30-year mortgage or a 7-year mortgage. They're buying a 24-month mortgage.
Right.
And so right now, as opposed to what we would love to do, which is have no points or a credit, we're settling with no points or maybe half a point or less than a point, because we want to keep that cost down, because we know we're going to be servicing our clients. We look at our clients as clients for life. We know they've got a refinance coming sooner than later. That refinance is going to come with additional cost. let's try to maximize what we're doing today so we can actually maximize for our client, the homeowner, what they can do tomorrow. And so that's really what I've been working on the most. That's why I love that temporary buy down that we've talked about over time. And it's because that money, it can be refundable, right? It's not going to be a dollar for dollar, like you're getting that money back, but it's going to get reduced off of your payoff, right? So it ends up being, if you're selling, you're going to get a dollar for dollar. If you're refinancing, it just means you've got more room in your loan amount to be able to finance those closing costs. So you don't need to come out of pocket on them.
Yeah. And in anything we can do, buyers, like, to not be out of pocket is what we want to consider first and foremost. And then taking that and leveraging it to the max, which is again why you want someone in your corner who really does understand the numbers. Like, I don't do this every day, and my buyers don't do this every day. So you really want to work with a professional, just like you would want to work with a surgeon who does, 500 of the same surgeries every year versus a surgeon who just says, "Hey, I do a couple a year. Let me help you out." So
I mean, surgeon
always go with a
is
pro.
extreme, but it's any profession, right?
Well, this
Like
is
as
financial
entrepreneurs,
surgery, Mark. This
right?
this is financial surgery because you can literally bleed out if you do this wrong.
She said it, not me.
Well, you can bleed
I'm
your
not
bank
killing
account out.
anybody.
You can bleed out your bank account. I mean,
You can't.
it's very serious. Or, you can do the options like we've talked about, which, are our example of saving $340,000 in a single phone call. You know,
And so that in and of itself, like if somebody has that money, as opposed to paying those points to get that quote unquote lower rate,
right?
it is exponentially more efficient for them to do that.
Yep.
And so it's just looking at the problem and then saying we still have this goal, and that's also part of the problem, right? And so how do we actually minimize the amount in so we can maximize the amount out?
Absolutely. Ooh, I like that. All right, I think you just spilled the beans on the mortgage industry today.
I just bring you the facts.
I love that. I love that. Well, I promised we were going to keep it light and tight today. If you have any questions at all around buying a house right now with mortgage rates the way they are and really getting a grasp of how you can maximize your money, Mark's information is attached in the notes. If you have any thoughts or questions or just comments on what we talked about today, we would love to hear from you. Listen, our prices have decreased here in Austin, Texas. Uh, Builders are incentivizing like crazy right now to move homes. I would love to see people in them instead of seeing institutional buyers like BlackRock, who's sitting on $51 billion waiting to buy these things up. And, by not buying, we're also putting these builders in a certain position where it's very tempting to make these really great projects and then sell them to institutional buyers because they just want to get their money and get out. So if you're thinking about buying in Q4, there are so many opportunities I talk to the builders all the time. I could go on and on about those and the incentives that are going on with them. And again, just plan before you pull the trigger.
Exactly. You
Yeah.
got it.
Well, Mark, thank you for giving us that look into the smoking hot market of mortgages right now. It is a different world for sure.
I appreciate it. Like always, Jennifer, for y'all watching, look out for yourselves, look out for your friends, connect them with the right people, and that's how we all get ahead.
Awesome. Thank you, Mark. Well, I'm Jennifer S. Goodman in Austin, Texas, signing out. Mark, any last words?
No, you've got it. You got it all covered. You guys are doing great. Keep pumping out the good content, and I look forward to catching you next time.
All right. Thanks so much for tuning in. We'll catch you next week.